What's up, traders? Matt from the Trade Brigade here with your broad market analysis on the day. We'll cover SPY the Qs and IWM. On the left-hand side, as always, we've got the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First one up on the chopping block is going to be our S&P 500. What do we have on the daily time frame? Nothing more than a day of consolidation, a balanced day, a doji, right? There's no aggressive trend here. Sure, we did make a higher high and a higher low, but they're not really too significant, right? So as of right now, we're thinking of this as the scenario exactly like we outlined in the weekly watch list video over on the main channel for bull flag consolidation and then either a break or a failure from the pattern, in which case we are still looking for a higher low to be produced at 429. On today's session, there was nothing overwhelmingly bearish about the activity, although there were certainly some periods of liquidation break, sharp declines, right? Something that looks like this, something that looks like this, and they felt scary in the moment. In the grand scheme of things, they have not damaged or even come anywhere close to damaging our daily trend to the upside. We never even made it to Friday's low, right? There's nothing aggressive in the bear camp about today's activity. Some interesting things we can learn from the 30-minute time frame. I do like how this pullback here on the intraday held this set right in here of highs, not only from last Thursday, but it was also a period of consolidation and highs from the Friday session as well before breaking out and ramping into the close. So I like that activity. We are supporting at a technical level, which again would indicate that the market wants to play respectfully here, which is a good thing. So as of right now, going forward, ideal consolidation still happens above 441 and can happen up to today's high of day. Do I really think it's going to remain in a tight one-day range like this? Not really. But even if it does break down underneath this level, that's fine. You can look for intraday scalps only to 437, for your next support point, which we know is the top of this prior balance. And we're building out that bull flag that we were just discussing. So use this as a bit of a pivot. 441, if we're above, that's like the ultra bullish consolidation period, looking for breakouts eventually. If we fall back down underneath, it's not the end of the world. You can take scalps only. I want to be very transparent about that. This is not a long-term short position, but scalps only on an intraday to get us to that 437. And then I would seriously reevaluate the chart to see if we turn there for a higher low and then start to continue this trend reversal to the upside. So that's our S&P 500. Again, nothing about today's activity, even though it may have felt scary at times, was inherently bearish. Let's continue along and talk about the QQQ for our Nasdaq 100. We were 1Q short. There we go. Now we've got the chart on the screen. What do we have here? Same exact theory applies, just a day's worth of balance. We did, however, violate this level that we were talking about in the pre-market. So it's not, to be quite frank, it's not the end of the world. There was just a little bit of consolidation before the afternoon spike that we were looking at. It was also the pre-market low. If you watched the live stream over on the main channel, we talked about that level as well. Nonetheless, still just going sideways, right? There was no significant pullback. And again, this did feel scary in the actual moment of it unfolding, but in all actuality, it didn't do any damage to our daily reversal of trend here. So no harm, no foul. Instead, what we should be watching now is, of course, the low of day. I'd split the difference between the two swing low, well, not really swing, but intraday pivot lows around 346. As long as we're above that, again, you're building out ideal bull flag consolidation here, like rainbows and butterflies, ultra bullish scenario. Over the course of time, your break of 353 does take you higher in the QQQ. A failure to hold up at this low, we know we're looking for that next structure, which is coming in at the prior low end of balance right here. This is the ideal or better, not worst case scenario type pullback. The line in the sand in the QQQ, as we know, is slightly different than our SPY, a little bit lower at 335. And again, nothing about today's activity strikes me as being overly bearish. We had some people getting long up here at poor trade location. Those people closed the position. That's what causes these sharp liquidation breaks, but it did not feel or seem at all during today's session like stronger sellers were going to step into the marketplace. The tempo today was extremely fast on the downside breaks, and it was not very methodical. It was very emotionally driven selling, which is not a characteristic of longer term positioning for a downside move. So that's our QQQ in a nutshell. Let's round out the broad market with our IWM, Russell 2000, and the small caps. If I could type today, there we go. We've got IWM up on the screen now. What's going on here? Again, just consolidation. Nothing inherently bearish about the chart. We are holding up at this level right here, the top of this balance. If you were to prefer to draw it in that way, we know that really 208 is still the level to be watching. We didn't really hold up at that pre-market and prior high that we discussed in the pre-market live stream. Again, not the end of the world, just a little bit of a liquidation break into the afternoon. We are still above the resistance trend line on the daily, which is a good thing. Ideal consolidation is going to happen and continue here above 204, but underneath 208, and eventually lead to a break, which should take us to 212. That's the ideal bull flag scenario if it breaks down and it's not really, in play to the upside anymore. If the rest of the broad market, the SPY and the Qs are also crumbling a bit, maybe this fails back down underneath 204, and that would be yet again another look above and fail. Okay, so the target wouldn't necessarily be the bottom end of the range because it does look like we're starting to change trends here. However, I would be looking for lower, right? So underneath 204, first target is back test of this breakout point 201, and anything underneath, it's fair game at least for these equal lows here, noting that IWM, it really hasn't gotten out of its own way, right? It really still hasn't gotten out of its own way. 208 is still that all-important pivot, so patience. So, in this one, bull flag does seem like the more likely scenario, but if we do fail back down underneath 204, and even worse, put in then a lower high, equal low, that's where you get something like this, and again, we're stuck in this area of balance. Small caps not really getting out of their own way, as I've pointed out. So that's going to wrap up our broad market analysis. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And with all of that being said, I wish you a green trading week.